sector is concerned, and this is on the back of the changes that have taken place in the ready reckoner rates, which have been increased by 4.4% for the year FY26 onwards. So the rates are effective from today. What we are looking at is that the initial speculation, which suggested for a 10% hike. So if we compare it in that perspective, the 4.4% of an overall increase that we are seeing is comparatively lower than what was anticipated. But what could this increase in ready reckoner rates mean? But firstly, for the context of what is ready reckoner rates, these are the benchmark rates set by the state government or the local authority for any property transactions which are there. So this is the minimal value that we are looking at. In fact, if we see what have been the collections for the Maharashtra government for FY25, we are looking at a mark of around 57,422 crore in property revenue, which is higher than the target of 55,000 crore that was guided for. So already there is a spurt in that we are looking at. But what are the negative implications for this on real estate developers as well as consumers? Something we should be focusing on. Firstly, if we see increased property cost, that is something that needs to be focused on. Along with that, now if you are looking at stamp duty, while the percentage has remained unchanged because of these rates which have been moved upwards, there would be higher stamp duty charges as well. These are for the buyers, but it's very important to note that while we are seeing moves on the real estate sector index for today, it's not the luxury side which will see a higher impact on these rates, but the affordable housing segment. So a lot of these moves today we are seeing is also related to the sentimental kind of move driven by the news flow which is there. So escalation of construction cost is something that we can expect along with that, and higher hit on the affordable segment is what we are seeing. Just quickly walking through the revised rates in the key regions, if you are seeing, so Solapur is the one with the highest revision, about 10.17%, followed by Ulhasnagar and Thane, seeing revision of around 7 to 9% upwards over here. But considering Navi Mumbai and Pune district, those range in the 6 to 7% of rate. That is what we are looking at. If you are to divide it into brackets, rural areas are seeing about 3.36% of an increase, urban areas 3.29%, municipal councils, this is excluding Mumbai region, we are seeing 4.5%, and for Mumbai overall, we are looking at a 3.4% of an increase. So this is the overall story which is building up. Just to give perspective on some of the key players which are there in Mumbai, we are looking at something like macro tech developers, Godrej Properties and Oberoi Realty, all seeing hits of around 3 to 4% each. Also want to highlight something like a Keystone Developers and Aditya Birla Real Estate, alongside which are also, over here we are also seeing about flattish moves over there as well. So this is the overall picture that we are seeing in terms of the news flow, wherein the ready reckoner rates have been increased, and thus the kind of moves that we are seeing in the real estate sector index today.
And what can we expect, Anushi, from Q4? Because what you've done is, and I understand, is that you've compiled basis what analysts are suggesting, what the Q4 earnings could possibly look like. So what is that perspective? Because is this 3% lower today justified is what I'd like viewers to understand.
Okay, so in case of where the Q4 numbers are concerned, it's a mixed picture that we are looking at so far if you are to take different developers over there. So firstly, if you are talking about the launches that we are expecting over here, so launches, the pace of acceleration has been considerably slower considering the lack of approval scenario which has taken place. We have two sets of scenarios over here from two different brokerages, wherein Nomura remains bullish on the fourth quarter for real estate, wherein they say players with large-scale launches have performed relatively better in Q4. Now, this includes the likes of something like Godrej Properties as well. There is high expectations building for how Aditya Birla Real Estate would do, because a lot of their launches were built up in Q4. So, commentary on their from the management side on whether there is spillover in Q1 is something that we should expect going forward. First, DLF, we are seeing it's expected that it is going to be a slower quarter, and Oberoi Realty as well, with the absence of new launches which have taken place in Q4. But do note that DLF had already achieved its Q3 FY25 guidance in the 9-month period itself. Now, what Citi is saying is that they expect Q4 pre-sales to be softer for all the covered companies which are there, and residential companies especially are expected to see about a 41% of a jump, but this is on a base of a 35% decline which was there last year. So what we have already highlighted is that the launches have been softer due to the lack of approvals which have taken place. So that is one factor we should be considering for. In terms of where the guidance is considered and how the companies have fared, let's take a look at that also. if you are looking at something like Aditya Birla Real Estate, now they have achieved about 33.6% of their guidance so far in 9-month FY25. So essentially, Q4 is the most important quarter for the business. We'll see how the pre-sales numbers shape up over here. Prestige Estates is one stock where the analysts expect the company to miss the guidance for the year and expect some spillover of these launches which are to take place in the first quarter of FY26. They've achieved about 42% of their guidance over here. Sobha Ajmera, about 61 to 52% mark we are seeing. On the other side, what we have on the stronger side is something like a Macrotech Developers and DLF. DLF has exceeded their guidance already in the third quarter itself, and Macrotech has remained consistent with a 20% of a pre-sales guidance mark that we have been watching out for. So this is the overall build up that we are seeing for the real estate sector.
Okay, thank you so much.